Afternoon, everyone. My name is John Jiminod, EVP of Production here at Angel Oak Mortgage Solutions. We'll get started here in about a minute. Today, we're going to do a deep dive into our debt service coverage ratio program, which is our most popular program and probably one of the easiest loans you can close in the universe. So I'll introduce our two subject matter experts here in about another minute. So hope everyone's having a great month, and I'm sure everyone's getting prepared for their upcoming Thanksgiving. So still have some people logging in. Nice crowd today. All right, let's get started here. Again, my name is John Jiminod, EVP of Production here at Angel Oak Mortgage Solutions. Been here going on almost 12 years. And I'd like to introduce our two subject matter experts. They're the G guys. You got Gary Martinek. Gary, introduce yourself, please.
Thanks, John. Hi, I'm Gary Martinek. I'm an account executive here at Angel Oak. I'm actually physically located in the Mid-Atlantic area, specifically in Maryland. Been in this business longer than I'd like to admit, about 30 years, in this market about 30. And actually, I'm a long time here at Angel Oak as well. Not quite as long as John, but I've been here 10 years now. So I've been here for quite some time.
Congrats, Gary. And then the other subject matter expert is Jerry Calderon. Jerry, please introduce yourself. And I love that shirt.
Thanks, John. Thanks. Good afternoon, everybody. My name is Jerry Calderon, account executive in the Tampa Bay area. I've been with Angel Oak now for 9 years. I've been in the industry for over 20 years. Super excited to be here with you guys today to talk about my favorite program here at Angel Oak, which is the Investor Cash Flow Program. This is an awesome program, and I'm looking forward to making all you guys experts in this program so you can go out there and grow your portfolio throughout offering this loan.
Yeah, so 30 years of experience just at Angel Oak on this call. So guys, take advantage of it. We have a question queue there. So we also have someone behind answering questions, but we'll ask those questions out loud. This is being recorded. We always get that question. This is not a deck. Everything we're doing today is on our website. So this isn't a PowerPoint. It's just all on the website, really easy to use and navigate. So everything we're going to do here today is on the website, but we will get this recording out to you before end of day. And if we don't answer questions, we will have your account executive reach out to you and answer your question directly. So let's get started. This is Angel Oak Mortgage Solutions website. Jerry, I think you're going to get us started on the program for the debt service coverage ratio. So cover some highlights here, Jerry.
Yeah, so the debt service coverage loan, guys, this is a perfect loan for investors who are looking to grow their portfolio. I call it a bulletproof loan because it's really simple to do, and there's an option for all investors regardless of the situation. The program goes up to.
Jerry, I'm going to interrupt you one second. We usually ask a poll, and I forgot to ask it before you got started. So the poll question is, who has originated and closed a debt service coverage ratio loan in the last 12 months? So we look forward to your participation in the poll. One of the things I'm going to tease today, we just rolled out a great feature on this that we're going to cover later, but Jerry started mentioning it. It's a bulletproof loan. This makes it borderline almost bulletproof and having all the information up front. So as the poll results come in, yeah, wow, this is interesting because usually it's maybe 60 have not, 40 have. 76% of you on this webinar today have originated a debt service coverage ratio loan in the last 12 months. So that's impressive. So hopefully we're going to teach you some tips and tricks today that can help you guys close more loans. And for the 25% that haven't, hopefully this will give you some confidence going forward to close these loans by the end of the year and into 2026. Jerry, sorry about that. My apologies, sir.
No worries. I remember doing this and being 30% that had done a DSCR loan. So So it's awesome that the market continues to grow in the non-QM space. But going back to the DSCR loan, we'll go up to a loan size as high as 3 million. We'll go down to a minimum of 100,000. This program can be used as a purchase, refi, cash out, rate and term, or we can even do delayed financing on this program, which is extremely popular also. The minimum FICO score that we'll go down to is 680. The max LTV that we'll go to is 85%. As John mentioned, we have rolled out now a new feature where we can actually use the rental AVM, which is the automated monthly market rent report that we can get now up front at the pre-qual stage without having to get the 1007 from the appraisal. And as long as the AVM confidence scores comes in at what we're looking at, you know right off the bat at the stage of the pre-qual that the loan's going to qualify and it's going to DSCR. Guys, that's huge. That's huge.
How great is that? At the pre-qual stage, knowing, provided, like you said, Jerry, provided we have an 80% confidence score, you're going to know what that rent is. So, guys, there's the one thing that made this loan semi not bulletproof, right, was not knowing what that rent was going to come in at, right? And now we have this, and if the rent comes in and it's got that 80 confidence score, you're knowing it at the pre-qual stage. So you can basically strategically build that loan and knowing that up front. That's a game changer.
It is.
It is.
It is, John. And I literally just had a broker call me this morning that had a borrower that was shopping around, and I said, send me the pre-qual. Let's let them know if it's going to qualify or not. And we did, and the confidence score came in. They can now go back to that borrower and say, hey, I can tell you with confidence that we can do this loan. And they're able to get them off the market immediately. So it's huge. Some of the other features from the DSCR loan, short-term rentals is also allowed. We can also do on DSCR, we can do DSCR with a 1-to-1 ratio. And the reason why I call this loan a bulletproof loan is because we also have options should the DSCR not come in at the 1-to-1 ratio. We have 3 different options. You got the 1-to-1 comes in at the PITI score or PITI loan mortgage. As long as that comes in, you're good to go. If the PITI comes in at 0.80 or higher, we have another option for you. And if we have a PITI that doesn't come in, now we have a no DSCR option and we can still do the loan. So at the end of the day, there is a loan there no matter what.
So, Jerry, couple of quick questions came in, and Tom's asking, is the 1007 waived if the rental AVM confidence score? So, Jerry, you want to answer Tom's question?
Either or. You can use either or. That's the beautiful thing about it is if the AVM doesn't come in and you want to still move forward and order the 1007 on the appraisal, we can do so. The reason you would want to go the AVM route is if you can save your borrower a couple $100 at the early stage. Why wouldn't you? It's going to make you look that much better. But we can do either or, John. So that's a great question.
Yeah, and then there's one other one that I want to correct Nathan. So we use the rental AVM, but we still need a full appraisal for the value of the property. So the appraisal is still needed. I just want to clarify that, Nathan. It's a great question. So, but again, I'm giddy over this rental AVM, man. It's just so powerful. And again, it makes Angel Oak, another leader in the industry because I don't know if anyone else out there is using that. So, go ahead, Jerry. I keep interrupting you. So,
no worries. All good stuff. So, for the DSCR loan, we don't require any income or any employment information. All the qualifications are going to be based off the cash flow, property cash flow. You can have unlimited properties, so they can have up unlimited amount of properties. The max they can do with Angel Oak is up to 5. However, we have gotten the exception in the past many times to go further than that. As long as we have a good qualifying borrower and we know that their loans are performing, we're able to get that exception. We do not allow first-time home buyers on this program. They do have to own a primary residency, or they have to have other investments that they've owned in the past. Okay. We can close this loan in an LLC. That's huge. Okay. So the property can invest in an LLC. And permanent and non-permanent residents are also allowed on this program. One of the things about the DSCR loan is that everybody's interested in DSCR loan. Everybody's going to talk about the DSCR loan. It's a topic conversation for anybody that's in the industry. So if you're not offering this program, I strongly encourage you to, because this is a huge program, especially in my market here in the Florida area. Everybody's doing DSCR loans.
Yeah. Yeah. So a couple other great questions. I'll ask Gary because we've blocked Gary out for a little while here. So Gary, who orders the AVM?
So that's a great question, because it's ordered automatically when you put the address in the quick wall that you submit.
Breaking up
And
there a
it
little,
pops.
Gary.
Can you hear me?
All right. Jerry, you want to take that?
Did you,
Sure,
can
yeah.
you not hear me?
So
You're
Gary,
breaking up a little bit, Gary.
Let me change my microphone here. Jeez.
we can hear
Jerry,
you
we'll
now.
let Jerry answer that question about who ordered the AVM.
So the AVM, when you submit the pre-approval, which is what we call a quick qual to us, you're going to put the property address in that quick qual, and that automatically runs the AVM at the pre-qual stage. So you're putting the information in the quick qual, but it's ran through our system.
And at no cost to the borrower. So it's, it's a really a great feature. And I just want to dispel one thing. This is not, when you put that address in there, you are not triggering TRID on that. So, an accurate address in there is very helpful to both you, the borrower, and even us at Angel Oak. I mean, the collateral that gets done when a DSCR doesn't come in at what you were thinking, this is truly, I can't emphasize this enough, this is truly a game changer. So,
Hey, John, can you hear me now?
yeah, go ahead, Gary.
Oh, it's okay. I changed speakers. Sorry about that.
That's all right.
I
So
just
Gary,
wanted to- what Jerry was just saying, I had, what kind of amazed me about the process is that as soon as the quick qual hit my inbox, the AVM popped up alongside of it. So it was simultaneously in my inbox. So as soon as I opened up that quick qual, I knew exactly what the rent was. I had 3 quick quals in a row the other day that happened just like that, where the AVMs all hit and confidence scores were where they need to be, and the rent worked. And I could tell every one of those LOs, we're good with the rent. And it happened immediately. Within a couple of minutes, I had the DSCR figured out, and it was good to go.
yeah, that's great info. So Gary, let's talk about one of the other things we talked about. Like Jerry says, this is a bulletproof loan. Talk about what you want to see, on the 1003, and what you want to see for credit depth and
Yeah, so the 1003 is pretty simple, right? And we want to complete 1003, except what we don't want to see on the 1003, we don't want to see any income, we don't want to see any employment, right? This is strictly a debt service loan, so the income, the employment do not matter whatsoever on this loan. We're only going to be looking at the cash flow from the subject property, so there is no debt ratio, right? You have to export all your liabilities, you have to put all the rental properties, every property that they own has to be listed on the 1003 and associate any type of mortgages or liabilities with those as well. But no income, no employment on the 1003. Just a complete 1003 minus income and employment, which makes it a lot easier since we don't have to pull any transcripts. We don't have to get any tax returns. It's not too many moving parts, really. From a credit standpoint, pretty simple. We need a 680 minimum FICO score. I need 3 trade lines reporting for at least 12 months, or 2 trade lines reporting for at least 24 months. And one of the nice enhancements that we've had in the last year or so is if you've got multiple borrowers on the loan, we will now default to the highest or higher middle FICO score, which is great because if you've got somebody who's got a 780 and somebody who's got a 680, we're going to be using the 780, which means a lot from an LTV standpoint, certainly a pricing standpoint. So it's a big win that we were able to pull that off in the last 12 months. So
Yeah, so
we're looking for
go
it.
ahead. Yep. I'm sorry, Gary, anything else?
No, I mean, that was it. That's really basically all we need from a credit and a 1003 standpoint.
So we have a question from someone here that said, Jerry, what about short-term rentals?
Absolutely, absolutely. We can do short-term rental. Additionally, on the DSCR loan, we can either take 12 months of the. One of the things that we forgot to mention is we have different options that we can actually do. You can take 3 months of the rent, and if that DSCRs, then you can utilize that amount. You can also take the 12 months of the VRBO or Airbnb statements, and we can utilize that amount if that DSCR. So, like I said, there's options in every which way for this loan program, and that's a great question. But short-term rentals we can absolutely do on this loan.
Yeah, and guess what? We'll do that up front for them too, right? We run that AirDNA and we don't even give it a haircut. It's whatever they say that short-term rental is going to be divided by 12. And you get that up front too.
Yeah, we can run that AirDNA for them up front as well. You just have to tell us the address, the number of bedrooms, bathrooms, and we can get that report back to you. So on a purchase of a short-term, you'll know right up front, the gross revenue on that property is X, and you can move forward.
Yeah, so a couple of other things, Jerry. I know I was moving the screen around. We allow gift funds, right? That was a feature in the last year or so.
We do, yeah. We can allow gift funds. They have to bring a minimum of 10% of their own funds. One thing we've also added additionally with the middle FICO from the highest primary wage earner is now we can accept spousal funds and they aren't considered gift funds. So that's another huge perk in the program. And one of the things that I forgot to mention in the introduction is a huge thing that you can do in this program is the interest only option. Because if the interest only payment, DSCRs, you can utilize that interest only payment as your PITI payment. And a lot of times you're able to save deals with just that interest only payment. Yeah. So that's something key that we can do. Additionally, when we have ARM programs that we can either do a 5.6 or a 7.6 ARM, or you can do the traditional 30-year fixed. And we can do non-warrantable condos on this program.
Condotels.
Condotels.
Yeah. I mean, this. I'm going to overuse Jerry saying. I know Chris Barker's always used this too. This is truly a bulletproof loan. I mean, it's qualifying short-term rental using the rental AVM, using interest only. All these features that really make it so much easier for you and your borrower to close this loan because of all the work that Gary and Jerry and all our account executives across the country do up front for you. Our pull-through on these programs are well into the high 70s. So it's really, and it's because of the great work that Gary and Jerry do up front for you, doing that pre-qual. And we even added a couple more states. Gary, I don't know if you want to cover this. If you're not licensed in certain states, we'll allow you to close a loan in these 23 states that we have.
Yeah, we just opened up a couple of states like Massachusetts. We just opened up where, this is considered a business purpose loan, right? So this is a DSCR loan. So it's treated as a business purpose loan. So we now allow in these 23 states, we allow, licensed loan originators who may not be licensed in that particular state to go ahead and originate that loan there, right? So if you're like, for instance, where I am in Maryland, but you're not licensed in Georgia, we now will allow you to originate that DSCR loan in Georgia, even if you personally are not licensed there. Right on our website, where you are right there at the bottom, lists all the states where you can now do that. And we're adding states, I would say every couple of months, there's another state or two popping on there that will allow.
Yep.
So
you're 100% right. Hey, Jerry, Hugo, I think the question Hugo's asking is, can you do a pre-qual without, let me rephrase it. Can you do a pre-qual for a TBD address?
We certainly can. Yep. Yeah, we have a lot of our preferred builders that we do pre-quals for at the TBD stage, and we can certainly do so.
Yeah. So a couple other questions here. Let me see. Sorry, Gary, you had to put yours on earlier. I got to put mine on. Yeah. So Paige, we answered.
Come on, guys.
We don't have an address. Yeah. If we don't have an address, So if we don't, getting beat up here. If I don't have an address, we can't do that rental AVM. So, but that's critical in getting that rental AVM. So Gary, can you do, can this program be used within a 1031 exchange?
Yes, yeah, we do allow it. I've done several myself. We do allow 1031 exchanges through this program.
Yeah. And Jerry, this happened in February last year, right at our sales conference that we had. The reserves, how many months reserves do you need?
We only need 3 months reserves. And the best part is we just need them on the subject property. So if they own 20 properties, we just require 3 months reserves on the subject property. That's it. And that's for all our loan programs.
You know, another good point about that too is that if it's a cash out refi, we can use the cash out, cash in hand to satisfy the reserve requirement.
Yeah. So, yeah, you know why? You know, these guys are the best at what they do. They know everything. They know how to get loans closed. Couple other questions coming in. I know, Jerry, we require, you mentioned this earlier. I just want to make sure, a first-time investor, we allow a first-time investor, but we prefer they have a primary residence, right?
Correct. Yeah. So, you know, if they have a primary residence and it's their first time buying an investment property, that's not an issue at all. Now, in the event that they don't have a primary, so I had a pre-approval that came through earlier this week, and it was for a borrower who was living with his fiance. They got engaged, but he had multiple investment properties, and he was looking to purchase another investment property. That's not an issue because he's got other investment properties, and we're able to do that. So it's just if they're looking as a first-time home buyer to purchase that we would have an issue.
Yeah, and Jerry, I love like the real life examples. I know we've had, you know, your counterpart in your market. She's been able to get, you know, a 10-pack done, right? Because if it makes sense, we'll do, like Jerry mentioned, our exposures, 5 loans or $2 million. Well, we're always working with your account executive to get that exception up front. So, and we do that all up front. So there's no surprises, and we get that exception that follows that loan all the way through our process. Another thing, Gary, we do too. And these come in multi-packs, right? These come in multi-packs. And if we know ahead of time, Gary, we'll have the same underwriter, right? Underwrite.
We always try, in my experience, it's always been that if we have, and I just had like a 3-pack. I never had a 10-pack, but I've had a 3-pack last month. And we made sure that we assigned all 3 loans to the exact same underwriter because there were simultaneous closings. It's much more cohesive to have the same underwriter on the same files and get the same conditions back. So yeah, we always try to funnel those loans to the same underwriter.
Yeah, so that's, again, ease of use and trying to make everyone in the transactions work. So, Jerry, you talked about LLC. Sometimes, or give us an example, like how many people are allowed to be part of that LLC, and if you've got any exceptions on that, please share.
So the LLC is one that we certainly see all the time. And the property can vest in the or be titled in the LLC. We can do S Corp, C Corp, or a revocable trust on the LLC. Now, one thing we do ask is all borrowers of the LLC must be on the loan, and the max is 2. So if you've got more than 2, unfortunately, we can't close under that LLC. And the LLC does have to be for real estate purposes. That's the biggest things in closing under the LLC is that all parties of the LLC must be on the loan, and the maximum is 2.
Hey, Gary, is there any seasoning on that LLC?
No, there's no seasoning requirement. Just has to be recorded, has to be in good standing. But there's no. I have people all the time that will establish separate LLCs for new properties that they purchase and put them all under different LLCs.
And Jerry,
I've seen it be done in underwriting where they establish a new LLC.
Yep.
But Jerry, I've seen more than 2 on a few occasions. So if you have 3, maybe 4, I would try to get that exception. Again, let's get it up front, right? So there's no surprises. All right, so guys, let's talk about, keep the questions coming in. We're monitoring them. We're also answering them behind the scenes here too. So Gary, let's talk about the closed-end second, because we just rolled, this is fairly new. Maybe I'm aging myself, but I mean, I think we just rolled this out, what, 7 months ago, I think.
You're talking about for the DSCR closed-end second?
Yeah, yeah, the DSCR.
Yeah, in July.
July, okay.
Yeah. So yeah, this is fairly unique. This is a second lien position, second mortgage for a DSCR loan investment property, obviously. Pretty aggressive doing a second lien position on a DSCR loan. So we don't have the HELOC yet, but we do have the closed-end second. We allow second liens up to 350,000. Minimum FICO score 700. I can go to a 70% loan to value. 720. I can go to, believe it or not, a 75% loan to value in a second lien position on a DSCR second. I do need a DSCR of 1.2 on that or higher, but it's a fairly unique program in this space. Really fairly unique.
Well, Gary, Angel Oak has a history. We'll roll something out, right? And then as we see performance of these loans, we usually add a feature, and I'm sure maybe the HELOC will be coming to this. But why does this make sense? Because you have people out there who have generational low rates, whether primary and even on their investment properties, so they don't want to tap that equity. They want to keep that rate in place where that is. So we've made it easy again for a debt service coverage ratio closed-end second lien. Like the guy said, we rolled it out in July. It's picking up steam, and it's becoming, a part of everyone's conversations these days. So, so one of the other features we have on our website, I just want to show, we have the quick quote. Okay, we're about 30 minutes in. I do want to. So we also have some tools up here. I'll kind of go through these guys. What monthly rent. So we have a DSCR calculator available on our website, right? So you can put in what the monthly rent will be, the loan amount, taxes, interest rate, insurance, 30-year fixed, and it gives you the 30-year. It gives you the fixed payment, and it gives you the interest-only payment. So you're going, and as Jerry mentioned, so this deal, there's almost a $400 difference between going interest only and doing a fixed payment. So, and it'll calculate your DSCR for you. So these are great tools that we have available on our website. So take advantage of them. And Gary, to submit a pre-qual, do you have to be an approved broker with Angel Oak?
Actually, you don't. You can submit a pre-qual to us. We can work on that, on the other side. My hope is that once we do a pre-qual for you, that you decide to sign up at that point. But no, you can get a pre-qual done by us at that point.
Yeah. So
and all these nice pricing built into the because everybody has a comp plan with us. That just won't be available when we price that loan up. But yeah, you can certainly do it. Happy to do it.
Yeah. So I mean, all the tools, everything on our website, except for the marketing and the TPO portal, you do not need credentials. So again, Jerry, Gary, any of our account executives across the country can. Okay. I'm going to do a quick U-turn here on programs. Where's our, Jerry, you might know this because you do more condos. Where's our, can't believe I can't find this, that condo only page?
You want the answer key?
No, not the answer key, hold on. Sorry, guys. We have a page with just condos. Sorry, guys. Losing it here a little bit. All right, Jerry, let's go I'll find it. So Jerry, let's talk about the quick quote. Let's talk about how everyone wants to know where rates are, right? So the most common question we get, what are your rates? What are your rates? So Jerry, let's run a quick quote scenario here.
Yeah, so the quick quote is one of the best tools in Angel Oak. I mean, when I started with this company, it was a selling feature for me to come on board because it was just so simple. I always say it's so simple that my 9-year-old can go on there and put scenarios in there, and somehow she always gets approved loans. She never gets declines. I don't know how, but it's just the way it works. But you do not need a user ID or a password in order to go to the quick quote. You just go to the main web page, which is angeloakms.com, and you click on the non-QM quick quote. Okay, we call a quick quote is what we call a pre-approval. The first question it's always going to ask you is to select your channel type. 99% of you guys are going to select broker, and then it's going to take you into the documentation type. So you'll see all the different documentation types that we have on here. In this particular scenario, let's just click on DSCR since that's today's topic. And it's very user-friendly, really easy. First question is loan amount, then it takes you through the LTV that you're looking for, transaction type, credit score, again, put the mid score of the highest of the two borrowers for DSCR, housing history, property type, this is where you would put whether it's a 1-unit, 2-unit, a condo, non-warrantable condo, any of that sort. You do have to put the property state for a DSCR loan. In the event that you're not licensed in that state, then it would ask that question. Amortization type, you choose fixed, or like I said, we have the different ARM options that you can do. The interest only, if you choose to do so, it automatically defaults to a 5-year prepayment penalty. However, you can go down on the prepayment penalty if you choose to. Lock duration, I always say typically to leave it at the 30-day on the lock duration. Borrower type, you can click on to see if they're permanent res. That's where you would click on that. Escrow waiver, and then the compensation type. There's 2 ways we can compensate you here, which is either borrower paid or lender paid. If you're going lender paid, then that's the amount that your company's approved for, and that's the amount that we would have to compensate you for. DSCR, if you don't know, just put it on the 1-to-1 ratio. If you already know what the DSCR is coming in at, because maybe a short-term rental or whatnot, and you have an idea, then you can put that in the variance of that. And then it's the last thing that you always got to have on the quick call for a DSCR loan is you have to put whether that you're active in that state that you're doing this DSCR loan in. And then the short-term rental, obviously click on that if it's yes or no. And then you'll see to the right, here is when you'll get the pricing, okay? You select the pricing that you're looking for. And look at these rates, guys. These are rates on a DSCR, no income, no employment, and you're talking about a 6.249. Are you kidding me? Like that's exceptional. But you pick your rates, and once you select the rate that you're looking for, doesn't mean you're locking your rate or anything. That's just the rate that you're choosing for the quick call stage. Then you're going to put in all of the information, the subject property information, the city, the county, the state, and the zip code, okay? You're going to select your account executive, okay? If you don't have one, feel free to select myself on there. And then you're going to put the loan officer, company information, NMLS, all that information on there. The comment section, guys, I strongly encourage you to use this section because your AE will receive this comment section, and they will be able to know if you have, for instance, investor that's looking to close under an LLC, then they'll know that right up front. If you put into the comment section that they're living in New York currently, but they're looking to buy an investment property, okay, we know that in the comment section. So use that part of the quick call is very useful for your AE. Then the 1003 and the credit report. That's all that you're going to need for the pre-approval purposes, and you're going to submit that. That'll instantly go to your account executive, okay? Once your account executive gets that, if it's the AVM that we're running, a lot of times before we even open the quick call, we already have the AVM results, okay? But once we open the quick call, your account executive will get back to you within 24 hours. Most of our account executives do the quick call same day, I would like to say. And then at that point, you're rocking and rolling. If the loan's approved, you're ready to go and request disclosures.
Yeah, so again, like Jerry said, that goes directly to the account executive. Guys, we have the most seasoned account executives in the non-QM space. So I always say your account executive is like your confessional booth, right? Tell them everything, and that helps you get your loan closed quicker. Speaking of speed, Gary, how quickly can you close a, within reason, a debt service coverage ratio loan?
Like we were talking about before, there aren't too many moving parts. We don't have to wait for transcripts to come back or anything like that, or income to be calculated. It's been my experience, 21 to 22 to 23 calendar days, we're good to go there. And we routinely close them that fast, or in some cases quicker. I mean, the one thing that can take a few minutes is the appraisal coming back, but other than that, we can move pretty fast on these loans.
Yeah.
One thing you mentioned also, John, sorry to interrupt, but one thing that we mentioned is also you can just request disclosures yourself and send them out initially as soon as you receive that quick call. And now you take that 21 days and possibly go to 17 days.
Yeah. And we all know in this business, the quicker you can get your borrower off the street, the better it is for everyone. So thank you for bringing that up, Jerry. That's been rolled out now for probably about 3-4 months. All occupancies, self-disclosures, I recommend. And guys, we're enhancing everything. Everything technology is coming this way to make your process with Angel Oak a lot easier. So I have a lot of fans who have been telling me where the condo, what I was looking, I think it's at the bottom of, because we're getting a few questions about condos.
If you go to resources, John, you'll see the condo questionnaire answer key and the non-warrantable condo.
I want
that's what you're looking for.
What I want is the landing page for our condos. It's at the bottom of the program's drop down. Okay, maybe that's why. Okay, I've got to make this a little smaller. Sorry, guys. This is live, though. This is what happens. So.
Hey, at least my dog hasn't barked.
Here it is. Non-QM condos. All right. So I'm just going to go over some of this. Thank you for everyone helping me out and finding my way. So we get a lot of condos. We do a lot of condos. And this is just the landing page we have, and kind of gives you some high level overview of just condos, because, as affordability gets harder and harder, obviously condos are becoming more and more affordable than single family residence. But I just wanted to share this. This is highlights of our condos. And guys, they're non-warrantable. It doesn't matter. We don't reduce an LTV. If the borrower qualifies for a 90% LTV, we will do a 90% LTV, not on debt service coverage. That's on bank statements or full doc. But I just wanted to show this out because we do have a lot of people probably on the Florida East Coast or West Coast that deal with a lot of condos. So just wanted to share that. Jerry, one of the things get Gary.
Yeah. So since we're talking about this, like where I am in Maryland on the Eastern Shore, Maryland, Ocean City, Fort Lauderdale, other places, we're going to have a lot of short-term rental income, right? So we're going to have, I'm losing my train of thought here. I'm sorry.
No, short-term rentals. You're right.
Yeah.
Condotels,
which is something that we're able to do now that we weren't always able to do in the past. So, and condos down to like it's right there, like 450 square feet of living space, which is something that's only been out for a couple of years now. So the other thing I wanted to point out, now I remembered what it was, in these resort areas, when we talk about non-warrantable condos, we're talking about high investor concentration. So we allow, you can see right there, I get this question a lot, 100% investor concentration, which would make it certainly non-warrantable, but we allow that every day. So that's really the point that I wanted to make.
I appreciate it. All right. So, and Jerry, how many units will we go up to on the debt service coverage ratio program?
So we'll go up to as high as 4 units on the debt DSCR loan. One thing, John, on the condos, while we're on the topic of it, before I forget, we do have a condo department that will review your condo questionnaire and all the condo docs prior to the loan being sent in for a pre-approval. And within 24 hours, we can tell you this thing's approved and you're good to go. Yeah. So don't hesitate to reach out to your account executive and send over that condo questionnaire and have it reviewed prior to the loan coming in.
Yeah, so guys, we've talked about the debt service coverage ratio. We've talked about the debt service coverage ratio, closed end second lien. We talked about the rental AVM, getting that up front at the pre-qual stage. We will run, as Gary mentioned, we will run the short-term rental for you as long as you give us the address, the bedrooms, and number of baths in that. And we're doing that all at the pre-qual stage, guys. This is not, just submit any old loan to us and we'll see if we can close it. We know how much your reputation, not just with your borrower, but your referral sources out there, we know how much that really means to you and to us, and we take that very seriously. So, Gary, we're going to talk about marketing now. So let's see if, because I knew this was going to happen. Hold on, let's see. I gotta, bear with me here. Timed me out. I was hoping that would not happen. So, oh boy. Sorry, guys, fill some time with the marketing, please.
So where John is heading right now, one thing, you do need login credentials to get into the marketing portal, like even if you were going to use this or work on a loan or something like that. But what we have on our marketing page in our portal are essentially all of our marketing assets that are available to you. And when it logs back in, we're going to show you a few things, some flyers, especially. Is it in?
Yep, we're good. Sorry. Sorry. It's moving a little slow. So, but like Gary's mentioned, you do need credentials. You need to be an approved broker with Angel Oak Mortgage Solutions in order to access this. It's taken forever. So, but a lot of stuff we have available to you. There are flyers, there are social media posts, and there's a presentation for you to do to your referral sources. So it's these, if you looked at the front of our website, it says underserved borrowers. Well, I think this is probably one of the most underutilized portion of our website. My gosh, this thing's taking a long time, guys. Sorry. But this is an underutilized. We have, marketing flyers for, again, Gary, I'll let you talk about the marketing flyers while I'm trying to see if I can.
So the beautiful thing about our flyers is they cover all of our programs, right? They cover DSCR, bank statement, whatever it may be that you want to market, even the highlights of all of our programs. And it's customized for you, right? So if you're out there, you're logging into the portal, it's going to have your name on it. You can drag your logo in. You can put your picture on it, all your contact information. You'll have information. Let's say we're going to talk about DSCR right now. All the high points about DSCR. What it will not talk about is Angel Oak. Right? It's going to be you. It's going to be, this is going to be your piece coming from you, not from us. And one thing I've talked to a lot of LOs about, which is, you guys are out there every day just trying to get new business, get in front of real estate agents, get in front of builders. Everybody goes out with a lot of vanilla stuff, the conventional stuff. Your rates may be a little different. You may have some enhancements here and there. I always talk about, hey, use one of our programs, like a DSCR loan, to get your foot in the door, right? Use our programs to market to these folks. Say, let's have an appointment. Let's talk about a program where you can buy investment property without having to show any income, any employment. It's easy to do because a couple things. One, agents want to know this for their own clients. And a lot of agents, probably most agents, are investors themselves, right? So this is going to be an important program for them. But this material is out there for you to use, customized for you. It doesn't say anything about us whatsoever. So it's coming from you. All professionally done.
Yeah, Gary, I use this stat when we talk about our bank statement deal loan, that 9% of the loans we close are actually for realtors, right? So yeah. The reason why we don't know on debt service coverage ratio is because guess what? We don't ask for job or income information on the 1003. So we don't know. And I bet you that percentage that 9% that closed in Bay State is probably, like you mentioned, Gary, is probably a lot higher than that. I bet you it's probably 15% are actual realtors. So
I would bet that. You know, I've done a lot of lunch and learns, and I've had some pretty significant, you know, numbers of realtors at different events. And when I ask them if, you know, raise your hand, like we took the poll at the beginning, who here knows what a DSCR loan is? It's amazing how many people don't. Then I'll ask the same question. How many of you invest in real estate, buy real estate rental properties? And the number of people who raise their hands is pretty high. So when I'm done with the presentation, they all want to talk about this program because they're not familiar with it. So,
well, Gary, we have an AE here in the Dallas-Fort Worth area who Googled real estate investment clubs, right? Real estate investment clubs. He stopped counting after 20. So, you know, we talk about, and I apologize, guys. I'm trying to access the TPO portal here where the marketing is, and it's timing me out. But where I was going with this, he went with one of his loan officers to one of that real estate investment group, presented on behalf of his loan officer. And the question he asked, these are professional real estate investment clubs. He asked, has anyone heard of a DSCR room? More than half the room raised their hand. They had not heard of a debt service coverage ratio program. So that's pretty powerful. So Jerry, talk a little bit about the realtor presentation, if you can. I know you do a lot of them. I know all of our account executives do a lot of them to see if we can get this thing to stop timing here. So.
Yeah, John, the realtor presentation is a great tool that we have for all you guys that honestly, like you said, it's underserved. It's not being utilized as much as it should be. What we do is, in the event that you get a group presentation of a group of realtors, we will come in and actually do a presentation on your behalf, not on Angel Oak's behalf, on your behalf, and we will discuss all of our loan programs, the bank statement, the DSCR loan, HELOCs, all of our loan programs. We'll go in and discuss those programs on your behalf, okay? And this is just something that's great for you because, like John mentioned, so many of these realtors are active in the market and they're looking to grow their portfolios. So every time we do them, they're the ones coming up and asking, hey, can you do this? Can you do that? Because they're looking for those things for themselves. So the real estate presentation, and in its actual presentation that we have already drawn up, and we just go in and present it on your company's behalf. Nothing mentioning in regards to Angel Oak, and it just makes you look like that much more of a professional. And every time that we do them, loans come out of there from there.
Yeah. So, and you can see by, Jerry and both Gary, they know their stuff. So, I always say, the one who doesn't take advantage of this is the one who's losing market share, right? If you're not closing non-QM loans, you're losing market share. So I was pleasantly surprised to see how many of you, when we did the poll, have originated a debt service coverage ratio loan in the last 12 months. That's awesome. The other 25%, guys, let's reach out to your account executive. So again, I apologize. We'll have your account executive reach out to you to take you through the TPO portal to show you where all these great marketing tools are. As Gary says, nothing says anything about Angel Oak on there. They're all, I think I counted, you could probably do a marketing campaign either between social media, and we have them already developed for you, whether it's marketing to a realtor or a borrower, or LinkedIn, Instagram, Facebook. It's all, we've got the graphics, we've got the content out there. You could create a marketing campaign every week on every platform. And I think we have between the flyers and the social media posts, 70 to 80 to be able to use. I mean, you could run a marketing campaign on non-QM for a year and a half. So I would take advantage of that. So guys, I know we're getting close to the top of the hour. So Gary, anything else you want to add here or just mention something in closing?
Yeah, a couple quick things, just real quick. The DSCR program, this has become, and Jerry said that it was his favorite program here, and from the beginning. For years, I was here was probably made up about 25% of my book of business. When rates started to shift in the marketplace a few years ago, the DSCR program became a much bigger piece of the pie, right? A much bigger chunk of the puzzle here. So it's probably 40+% of all the business that I do right now, significant, and it's growing all the time, and it's becoming more and more aggressive. And so definitely pay attention to it. The last thing I would say, the only other thing I would say is, we touched on it briefly before about our risk department. We make exceptions on loans, okay? Not every exception can be granted, but somewhere between 20 and 25% of the loans that we do have some type of an exception on it. John mentioned, tell us what's going on if you think there needs to be an exception. We will get that hammered out at the the pre-qual stage. We'll have that addressed, and that will follow that loan through the process. So don't shy away. If you believe in a loan and you think it's good, but it needs a little love, a little bit of an exception, bring it to us and we'll talk about it, and we'll send it in to see if we can get that exception made. So don't sit on it. Don't pre-screen it. Get it over to us.
Yep. Thank you, Gary. Jerry, anything else in closing?
No, well said by Gary. I mean, I thank everybody for being on here today. One thing I will say is, guys, the non-QM space isn't what it was before. When Gary started 10 years ago, I started 9 years ago, John. I mean, this space was, at that time, far and few. And I remember going into offices and brokers telling me, no, I don't do those loans. I don't mess with that stuff. And quite frankly, if you're not doing them and you're not messing with that stuff today, you're missing out on the boat, because your borrowers are going next door and they're getting these loans. One of the best things about Angel Oak, like John said, is the amount of season that we have in our AEs. The AEs in this company have been here for many years, 30 years of experience just in this panel alone. So they know what they're doing, okay? They take pride in the pre-approvals. They take pride in their pre-quals and letting you know that the loan can qualify and the loan can close. And not only do they take pride in their pre-approvals, they take pride in structuring the loans for you. There's many times when I get the call and the broker is looking to do the loan a certain way, we end up structuring it another way in order for the loan to close, and they're happy and peasy. At the end of the day, our job is to make sure that your relationship with your real estate partners and your borrowers just continues to grow. We're here for you, and we're here to help in any which way that we can.
Yeah, very well said, both Gary and Jerry. I just was notified that it's an Encompass issue and not our TPO. So, and again, I apologize. I want to make a couple of other comments here. One, this is being recorded. We will get this out to you before end of day today. But I wanted to, like Jerry and Gary, and on everyone's behalf of Angel Oak, for those who have closed loans with us, thank you very much. For those who haven't, give us a shot. So from everyone here at Angel Oak Mortgage Solutions, wishing you and your families a happy Thanksgiving. And if you're traveling, safe travels. Thank you for being with us today. Thank you, Jerry. Thank you, Gary. Appreciate you guys.
Thanks.
Thank you, gentlemen.
Thanks, sir.